Rohit Srivastava, founder, Market Strategist, IndiaCharts.com, joining us on the show. Rohit, we saw extreme volatility in the markets yesterday. Markets are in the green for a second consecutive day this week. What are you making of how markets are reacting to the international disorder, given that the ceasefire could likely be ending between Iran and the US very soon?
Well, markets are slowly and steadily heading higher is what I would say. Intraday moves of 50, 100 points are more normal than the 300, 400 point moves that we were probably seeing, last month. So we are definitely seeing reduced volatility, which should eventually reflect in the India VIX, not yet done so. So I sense that the market will push towards 24,600, 24,800, which is going to be a near-term resistance level. We are not sure whether you'll get past that immediately, but I do think that the bottom has definitely been put in place. So therefore, for investors, this will remain a market that you continue to buy into, especially when it dips. It gives you good, opportunities to, get in at lower levels. That is what we would be watching out for. Traders may sometimes look for, potential setback at some point to get a better entry, but so far it looks like we want to continue to head higher.
Macros are looking strong. I also want to quickly take your opinion on the IT sector. HCL Tech is reporting its fourth quarter, numbers today. Nifty IT has remained resilient last week, with the slowdown cues coming from the US and the AI hype also cooling off in the past couple of weeks. What are you making of what to look out for as far as IT sector is concerned?
The numbers are probably not going to look that great. We saw that with TCS. We are seeing Persistent that is reporting yesterday, also down slightly today. So I sense that there will still be some negative impact on the IT sector. There was a short-term trade. Some of them have bounced back. But from a long-term point of view, I've really avoided the sector from an investment point because growth rates continue to be very, very slow. Single digit growth rates for most of the large IT companies is not very, very attractive given that valuations are much higher. So IT sector remains an avoid from an investment point.
I also want to take your outlook on the metal sector. Vedanta's board has approved a demerger, 1:1 share in the new entities post this value unlock. How are you looking at the demerger repositioning metal sector amid global tariff risk and the domestic push, of course, for infra growth?
So there have been a lot of positives, for the metal sector, not just because of investment in, infrastructure, which not just the redevelopment. So because we've had this war and there's going to be a lot of expenditure on redevelopment, the metal demand story doesn't seem to be going away anytime soon. And then you have the energy angle, because most countries are going to focus on, having their own energy security, and the investments in the energy sector going to drive demand for things like copper. So I think, ferrous, non-ferrous metals basically staying in demand, prices remaining elevated. If you look at, copper prices, steel prices, which were down, are beginning to pick up. So I sense metals will still remain a good sector, to invest in, and which will probably outperform the markets in the months ahead.
All right. Before I let you go, Rohit, I have to ask you, as far as the geopolitical tensions is concerned, every market is to its own right now. Asian markets have reacted positively. US markets are down as of yesterday. When you look at the impact, not just on energy prices, but largely on gold, silver, crude, how are you expecting Sensex and Nifty? Are they vulnerable today? Are we better off today? Have the markets priced in the volatility?
So I think our markets underperformed the others on the way down also, because we fell a lot more than the rest of Asia or the emerging market space. And one of the reasons for that is our currency has especially been particularly weak. Most of the currencies were actually strengthening against the dollar when you take a 6-month or 12-month time horizon for the Brazilian real or for the Chilean peso or even the Chinese yuan. All of them have strengthened, but the Indian rupee has continued to weaken during this phase. Take a deep look at the currency side to get greater stability. Otherwise, as far as the geopolitical risks are concerned, most of the world markets are discounting it because we are in the de-escalation phase. So whatever the daily news flows come out, as far as whether the ceasefire continues, doesn't continue. What markets understand is if we are de-escalating one way or the other, it's good for the markets, and that is why they are not reacting to that news flow anymore. The point with India is also bouncing back, but we are not at all-time highs like some of the other markets, whether it's Japan, Taiwan, or US. And that's, I think, one of the lowdowns has been the currency. If we can sort of address that, then it would really solve the situation a lot more.
Before I let you go, how worried are you about weakening currency today?
So I see. I do sense that the measures the RBI recently took might not see it weaken further, and also because the dollar index itself may have not broken out beyond 100, which is a good sign for any pressure coming from the dollar. But the dollar has been falling for the last 1 year, and the rupees weakened, and the reason for that is we don't really have foreign fund flows. And the foreign fund flows are not coming because there's no tax incentive. So we are completely dependent on our other sources of funding keeping the rupee strong, which we are still at a current account deficit, even though the CAD may have come down over 10 years. Even at 1% or 1.5%, it's still a deficit. And so if you're dealing with a deficit, it eventually ends up reflecting in a weak currency. All you can do is keep the volatility down, which is what the RBI has been doing for the last 3, 4, 5 years, is by intervening in the markets, making sure the rupee doesn't fall too fast. But it's still falling. So if we can change the trajectory, it would play a big role in not only getting foreign flows, but also creating greater confidence in markets.
All right, Rohit, thank you very much for taking time out. Thank you for joining us here on News9 this morning.